So we're watching Bitcoin now, and of course we're having a sell on the news moment after the 11 Bitcoin ETFs are approved. Bitcoin took off. It went up 40 to 50%. We have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million.
Welcome to this special update where Cathie Wood explores the most recent changes pertaining to Bitcoin in 2024. We discuss the exciting ride ahead, from the new approvals of Bitcoin ETFs to Cathie's perceptive forecasts for the upcoming weeks. Prepare yourselves for Cathie's bullish prediction, which calls for a spectacular increase in the asset class value of Bitcoin from $700 billion to an incredible $20 trillion, a staggering 30 times its present worth. Learn how important BlackRock's impact is and how big hedge funds and institutional investors are becoming more involved in determining the direction of Bitcoin. Cathie Wood illuminates the decentralized and open structure of the Bitcoin network, which makes manipulation extremely rare, as we look into this significant milestone for the Bitcoin community, highlighted by anticipated ETF approvals. Stay tuned for a momentous interview with AR Invest CEO Cathie Wood, CEO of AR Invest, as we explore the specifics of Bitcoin's rise in the financial world. Now, let's hear what she will say next.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold. So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing. And then it went back, a reverse course. So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it. And we'll get other reminders, and they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year. And that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets. And Bitcoin among them. It was interesting, I think it was late in the fourth quarter, earlier in January, Bitcoin led the market. And so so we're watching Bitcoin now, and of course we're having a sell on the news moment after the 11 Bitcoin ETFs are approved. And I don't know how far that's going to go. This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity values. After this election, I don't think Chairman Gensler will remain at the SEC, whoever is elected. I think he has aspirations for some kind of political appointment. So he may go for that reason if Joe Biden is reelected, or he will go altogether if a Republican is nominated. So yeah, the SEC could drag its feet, but I think the court cases have spoken pretty loudly. We have the Coinbase hearings. We'll get lots of information about what is not a security during that trial. So I do think that raises the odds of an Ethereum spot approval. The Gensler could be in the way, but we do think it will be approved.
In her discussion of the regional bank crisis, Cathie Wood blamed the record 24-fold increase in interest rates in just 17 months on the Federal Reserve's quick rate rises. She compared this to the twofold increase made by the former chairman Volcker. Wood suggested that Bitcoin's rise during this period might have been anticipatory of the Fed's financing program, which later reversed course. Wood projected that the Fed would now lower rates as a result of unclear economic data that suggested systemic stress. Anticipating widespread deflation, she highlighted the significance of price deflation above actual economic data. Wood thought that this year's deflation will surprise the Fed, which is now focused on inflation, and lead to interest rate reductions, which would be good for riskier assets like Bitcoin. She emphasized how Bitcoin leads the market and mentioned to a possible sell-off following the approval of 11 Bitcoin ETFs. Wood predicted the entry of institutional and retail platforms into the market, highlighting the post-election scarcity value of Bitcoin. Regarding SEC Chairman Gensler's future, she predicted that, depending on the results of the election, he would step down to take a political position, but she also anticipated Ethereum to be approved in spite of any potential roadblocks. Let's hear what she has to say after that.
I think that Coinbase is going to do us a great service through the court system, and the court system is going to do us a great system. You know, if you look back in history, we have had an experience like this before. It was when derivatives were launched, and the SEC and the CFTC were vying for regulatory power over derivatives. It went all the way to the Supreme Court, which this probably will, and that forced legislation so that both the SEC and the CFTC have a role in derivatives oversight, but those roles are clearly delineated and they don't cross over. I think the same thing's going to happen here. This could be an election year issue, and I think that's one reason we are seeing so many congressmen getting so well educated on what this is. I mean, I heard Congressman French Hill a couple of weeks ago, and I said, wow. Yeah. He's come up the learning curve so quickly and knows so much. This is fantastic. Knowledge and education. Knowledge is power. Education, obviously, is the route to knowledge. So I think, yes, I think the odds, I don't know how high they are, but in the next 2 years, I think the odds of legislation are very high. I don't know how the election year complicates it. I do know that there are voters out there who are one-issue voters, and they are crypto voters, and I know that Washington is hearing that loudly and clearly. I think when people put something in their portfolio, they're apt to watch it a little more closely and maybe seek out a little bit more education, even if their advisors have put them in. And certainly the advisors have to educate themselves. So I think once more and more people educate themselves and understand what this is, it's a technology, yes, and it's a monetary system, then I think they're going to understand why it's taking off in emerging markets and why everyone should have a little bit of an insurance policy called Bitcoin. And last year, the regional bank crisis was a great case in point. I think many people were shocked as regional banks, the KRE, the regional bank index, was imploding. Bitcoin took off. It went up 40 to 50%. And it was the first time that traditional investors, many more, took note. Wait a minute, why did it do that? This is supposed to be a risk-on asset. It's supposed to be very volatile and highly correlated with risky assets. What just happened? And what they learned there was that, hey, it's a risk-off asset too. Why? Because there's no counterparty risk. like there is in our banking system. You're not going to be held hostage like you were in 08, 09, wondering if your bank was going to survive or you'd get any more than 250,000, the guarantee, the FDIC guarantee out of your bank. So this doesn't happen with Bitcoin. Education. Wow. How many risk off and risk on assets are there? So I think the more people come in, the more they'll be comparing and contrasting what this is to what we have in the traditional financial world. And guess what? This is better. This is better. And it is why emerging markets talk about needing an insurance policy in hyperinflating economies. It's an insurance policy against counterparty risk, inflation, and deflation.
Cathie Wood highlighted comparisons between the historical introduction of derivatives and the possible effects of Coinbase's legal disputes. She likened the state of affairs to a previous Supreme Court decision that established the SEC's and the CFTC's distinct regulatory responsibilities when it comes to managing derivatives. Wood expected the current crypto regulation discussion would have a similar ending, with a major role for the courts. She observed that legislators are becoming more knowledgeable with cryptocurrency issues, especially in election years, and she surmised that this may increase the possibility of legislation in the next 2 years. Wood highlighted the necessity for advisors and investors to educate themselves on the financial and technological elements of cryptocurrencies, as well as the rising power of voters who are knowledgeable about cryptocurrencies. She maintained that as more people become aware of Bitcoin's functions as a monetary system and a technology, its use is expected to grow, particularly as a counterparty risk, inflation, and deflation hedge in emerging nations. Wood also highlighted Bitcoin's unique position as a risk-off asset, contrasting it with traditional financial instruments and emphasizing its appeal in uncertain economic conditions. Until next time, happy investing.